Hey guys, welcome to the Bitcoin Fortress podcast, helping you increase your financial freedom. This is episode 120, recorded here on June 16th, 2024, Father's Day. So happy Father's Day to all the dads out there. This podcast is for entertainment only and is not investing advice, so please do your own homework. Well, we'll start with the market update outlook, and then we'll get into the top Bitcoin news. There's quite a bit of stuff to go over this week, as usual. So let's jump right in. The S&P 500 on Friday notched its best weekly advance in over a month, primarily on the back of surprisingly soft inflation data. The headline consumer price index for May came in flat in what was its first unchanged reading since July 2022. The consumer inflation data ended up overshadowing the other major event of the week, the Federal Reserve's latest monetary policy decision and the release of the updated summary of economic projections, or the so-called dot plot. The central bank kept interest rates steady at a 23-year high, but also signaled an expectation of only one 25 basis point cut in 2024 from a prior forecast for 3 such cuts. For the week, the S&P 500 added 1.6%, while the Nasdaq climbed 3.2%. Conversely, the blue chip Dow fell 0.5%. Looking ahead, despite a holiday-shortened week due to the Juneteenth falling on Wednesday, Wall Street will have plenty to look forward to. Expect some volatility in the markets in the run-up to triple witching on Friday, an event in which stock options, stock index futures, and stock index options all expire on the same day. After a heavy fortnight of economic data on the labor market and inflation, the calendar will ease up somewhat next week. Traders will receive readings on U.S. retail sales and industrial production in May. Market participants following monetary policy will also be keen to hear from several Federal Reserve speakers, including Governors Lisa Cook and Adriana Kugler, especially after the central bank's latest rate decision and updated dot plot last Wednesday. On the earnings front, home builders Lennar and KB Home will be in focus, along with IT and consulting services firm Accenture and supermarket chain Kroger. Retail giant Walmart will be in focus as well, with its member-only Walmart Plus shopping event kicking off. Okay, jumping into the Bitcoin news. This is from Bitcoin.com, the week in review. So let's see what random things they have in here this week. Former U.S. President and presidential candidate Donald Trump has engaged with leaders in the Bitcoin mining sector, expressing his support for the industry. Trump stressed that Bitcoin mining may be our last line of defense against a central bank digital currency. He emphasized the importance of producing the remaining Bitcoin in the U.S., suggesting it would contribute to the nation's energy dominance. More on that in the next article that we'll go over. Local reports indicate that lines of several dozen people are waiting to purchase gold bullion from various state-owned banks in Vietnam, primarily in Hanoi and Ho Chi Minh. The interest in buying the precious metal at this time seems to be driven by the lower prices these banks offer to retail investors, in line with the Central Bank of Vietnam's objective of aligning domestic gold prices with global ones. New York Attorney General Letitia James has sued Novatech FX, AWS Mining, and their founders for orchestrating crypto pyramid schemes that defrauded over 11,000 New Yorkers out of more than $1 billion in cryptocurrency. These companies targeted vulnerable immigrant communities, particularly Haitians, with false promises of high returns. Scammer's gonna scam, I guess. Nigeria's decision to halt naira trading on cryptocurrency exchanges is likely to worsen matters for its volatile currency, an associate professor at the University of East London has argued. The associate professor said Nigeria can effectively regulate the cryptocurrency industry through a framework introduced by its securities regulator in 2022. Rich Dad Poor Dad author Robert Kiyosaki has emphasized that his prediction of Bitcoin hitting $350,000 on August 25th is not a lie. Quote, sadly, He also expressed his bullish outlook for Ethereum and Solana, noting that he will keep buying the three cryptocurrencies because he is, quote, quite certain that their prices will continue to rise. So, Robert, shitcoining. When will you learn? But I guess he figures, well, I can make some money on it. So that just tells you, though, he doesn't truly understand Bitcoin. But at least he's still pushing for Bitcoin and gold. So, oh well. Next article is from bitcoinnews.com. This was posted June 14th. Donald Trump's Bitcoin bet, a new chapter in American politics. In a series of remarkable developments, former President Donald Trump has emerged as a significant proponent of Bitcoin, a stance that contrasts sharply with his earlier skepticism. This shift was prominently displayed during a recent meeting at his Mar-a-Lago residence, where Trump engaged with leading figures from the Bitcoin mining industry. The gathering underscores his growing embrace of the Bitcoin world and its potential impact on the upcoming 2024 presidential election. On a Tuesday evening, Donald Trump welcomed several top executives from the Bitcoin mining industry to his Mar-a-Lago residence. Among those in attendance were representatives from major firms such as Marathon Digital, Riot Platforms, TeraWulf, CleanSpark, Core Scientific, Archon Energy, Hoya Energy, and Exicor. These companies collectively represent a substantial portion of the Bitcoin network's computing power. Jason Browder, a senior vice president at Marathon Digital, described the meeting as highly productive. Trump was prepared and informed, Browder remarked, highlighting the former president's understanding of the complex issues surrounding Bitcoin mining and its intersection with energy policy. One of the key themes Trump emphasized during the meeting was the potential role of Bitcoin mining in stabilizing the power grid. This point was echoed by multiple attendees, including Matthew Schultz, executive chairman of CleanSpark Inc. Schultz quoted Trump as saying that Bitcoin miners help to stabilize energy supply from the grid, a perspective that aligns with the views of many in the Bitcoin industry. Schultz highlighted that Trump is keen on maintaining the U.S.'s dominance in Bitcoin mining and preventing China's influence. He expressed astonishment by Trump's understanding of the Bitcoin mining industry and his personable interaction, noting Trump's intelligence and lack of reliance on notes. Schultz initially expected the meeting to be a campaign rally, but found it to be more substantial and engaging. He later tweeted about Trump's support for Bitcoin and CleanSpark Inc.'s operations in Georgia, Mississippi, and Wyoming. Chris Cook, president of Exicor, also met with Donald Trump and discussed retraining workers displaced from declining industries like coal to work in Bitcoin mining. Cook highlighted that Bitcoin mining could create numerous ancillary jobs and potentially double U.S. power generation, which he estimates could boost GDP by 2 to 3% and create nearly 1 million jobs. He noted Trump's awareness of the significant energy demands of AI. Trump's endorsement of Bitcoin mining as a stabilizing force for the energy grid comes at a time when the industry faces significant scrutiny over its energy consumption and environmental impact. Critics, particularly within the Democratic Party, have raised concerns about the carbon footprint of Bitcoin mining operations. In response, Trump has positioned himself as a defender of the industry, advocating for its role in energy management and economic growth. Trump's newfound support for Bitcoin mining has significant political and environmental implications. Trump's explicit endorsement of Bitcoin mining introduces another dimension to the continuing discussion on the viability and prospects of digital currencies. This divergence in perspectives is likely to play a pivotal role in shaping the discourse around Bitcoin in the 2024 election. Trump's campaign has already begun accepting digital asset donations, signaling a deeper integration of digital assets into his political strategy. This move aims to attract a new demographic of voters who are invested in the future of digital currencies. Brian Hughes, senior advisor of the Trump administration, said, "Crypto innovators and others in the technology sector are under attack from Biden and Democrats. While Biden stifles innovation with more regulation and higher taxes, President Trump is ready to encourage American leadership in this and other emerging technologies. In a powerful endorsement on his social media platform, Truth Social, Trump highlighted Bitcoin's potential as a defense against centralized digital currencies, which he views as a threat to American economic dominance. He wrote, "Bitcoin mining may be our last line of defense against the CBDC. Biden's hatred of Bitcoin only helps China, Russia, and the radical communist left." Trump's reference to a central bank digital currency touches on a broader debate about the future of money. While the Federal Reserve has not yet decided to pursue a CBDC, it has been exploring its potential benefits and risks. Trump's opposition to CBDCs aligns him with the Bitcoin community's fear of increased government control over financial transactions. Trump's strategic embrace of Bitcoin and other digital assets is not just about economic policy. It's also a savvy move to widen his voter base. By positioning himself as a champion of the Bitcoin industry, Trump hopes to attract tech-savvy voters and those who are disillusioned with traditional financial systems. During the Libertarian National Convention, Trump made a bold pledge to commute the sentence of Ross Ulbricht, the convicted founder of the Silk Road online marketplace, which further endeared him to the libertarian and Bitcoin communities. Trump's pro-Bitcoin stance has also caught the attention of financial analysts. Banking giant Standard Chartered has projected that if Trump returns to the White House, Bitcoin could see a significant price surge, potentially reaching $150,000 by the end of the year. This forecast underscores the potential market impact of Trump's support for digital currencies. As of now, Bitcoin trades at around the $67,000 mark, experiencing slight fluctuations over recent days. The prospect of a Trump presidency is seen as a bullish signal for the Bitcoin market given his advocacy for favorable policies towards the industry. The meeting at Mar-a-Lago also highlights the ongoing challenges and opportunities for Bitcoin mining in the U.S. Since China's ban on Bitcoin mining in 2021, the U.S. has become the epicenter of this energy-intensive industry. Democrats have been leading efforts to increase scrutiny on Bitcoin miners, with figures like Senator Elizabeth Warren calling for stricter regulations. On the other hand, Trump and his allies, such as Texas Senator Ted Cruz, have positioned themselves as defenders of the industry, advocating for a balanced approach that recognizes the economic benefits of Bitcoin mining. Central to Trump's Bitcoin advocacy is his vision of American energy dominance. He believes that supporting Bitcoin mining could help the U.S. achieve this goal by making better use of excess energy and enhancing grid stability. "We all want the remaining Bitcoin to be made in the USA. It will help us be energy dominant," Trump proclaimed on Truth Social. This vision is part of a broader strategy to counter foreign adversaries and reduce dependence on centralized financial systems. By promoting domestic Bitcoin mining, Trump aims to ensure that the U.S. remains at the forefront of technological innovation and economic leadership. Donald Trump's engagement with the Bitcoin mining industry marks a significant shift in the political landscape surrounding digital currencies. His support for the sector not only highlights its potential role in energy management and economic growth, but also positions it as a key issue in the upcoming presidential election. Next up, this is from Bitcoin.com news. This was posted, looks like today. Not to be outdone, report says Biden administration, Mark Cuban, and Ro Khanna set for critical crypto roundtable. The former 45th U.S. President, Donald Trump, has recently begun to assure Bitcoin and blockchain advocates that he would be the optimal choice for U.S. President in 2024 to safeguard these technologies. Incumbent U.S. President Joe Biden and the Democratic Party have faced accusations of choking cryptocurrency innovations, including non-custodial solutions. As often seen with politicians, the Biden administration may be altering its position. Bitcoin Magazine has reported that California U.S. Congressman Ro Khanna is organizing a Bitcoin and blockchain roundtable with members of the Biden administration. In addition, Members of both the U.S. House of Representatives and Senate are expected to participate in this purported meeting. Billionaire Mark Cuban, known for his use of cryptocurrency and investments, is also set to attend, according to the report. Whether the meeting will actually take place is still uncertain. The letter describes the roundtable as the most significant meeting between policymakers and innovation leaders in blockchain to date. Although Cuban is supportive of crypto and not necessarily a leader in the space, the letter does not mention any other blockchain sector representatives. The meeting is reportedly scheduled for early July. Cuban has warned in the past that the U.S. Securities and Exchange Commission's actions could cost Biden the election. Next up from No BS Bitcoin, EU's encryption report finds Layer 2's private ownership of Bitcoin, quote, problematic for law enforcement. Uh-oh, privacy under attack again, alert, alert. The report provides a broad overview prevailing and upcoming encryption technologies, including quantum computing, Bitcoin and other cryptocurrencies, DNS protocol, 5G networks, machine learning, and artificial intelligence, and explores how to uphold citizens' privacy while enabling criminal investigation and prosecution. Maybe the answer to that is stomp on privacy and give full access to law enforcement. That seems to be the direction that they're headed. It is vital that relevant stakeholders in the justice and home affairs domain are aware of these developments and are provided with the means to stay on top of these technological advancements, concludes the report. Member of European Parliament Patrick Breyer of the Pirate Party warns that the following push against secure encryption comes as a part of renewed push for European mass surveillance by Europol and the European Commission. Breyer also warns that European Council has already agreed to greenlight Chat Control v2.0 proposal next week. Several sections of the encryption report focus specifically on Bitcoin and other cryptocurrencies. These include the following excerpts. There are mainly two types of wallets, custodial and non-custodial, or self-custody. Custodial wallets refer to wallets where the user does not hold their own private key, but the service does so on behalf of the user. This is very common, as for example, funds stored at a centralized cryptocurrency exchanges are custodial. The phrase, not your keys, not your crypto, refers to such storage. While easy to use, there can be risks using custodians. As the company holds the private keys, the user has no cryptographic control over these funds. For law enforcement agencies, this can be beneficial as they can request exchanges and custodian wallet providers to freeze or seize cryptocurrency assets. When they have legal grounds to do so, and the exchange cooperates with law enforcement requests. Non-custodial wallets refer to hardware and software wallets where the user has responsibility for their own private key storage. This comes with great responsibility, as a loss of the private key means the funds are not accessible anymore. Furthermore, accidental sharing or theft of the private key can lead to permanent loss of funds when obtained by a criminal. A mnemonic phrase is a group of words, generally 12 or 24, which is used to access a wallet or several wallets. For example, if a user creates a wallet with a Trezor or a ledger, a mnemonic phrase may be created. This phrase will work on any similar hardware device and give the user access to the funds from anywhere, even when the original hardware wallet is broken or lost. This also means that when law enforcement obtains the mnemonic phrase of a suspect in a house search, for example, they can access and seize the funds, explains the report. BIP 3830 allows for an extra password on top of the private key mnemonic phrase. This may demand additional password guessing from law enforcement when trying to access a suspect's wallet, even when the mnemonic phrase is known. Another development is SLIP 39 or Shamir Backup 31, implemented, for example, by hardware wallet Trezor Model T. This could, for example, mean that a user creates 5 shares, out of which 3 are needed to access a wallet. If all these shares are stored in different locations, law enforcement's task of recovering a criminal wallet could be complicated significantly. There are many developments on so-called Layer 2 that lead to advanced encryption of cryptocurrency transactions. Layer 2 solutions are systems or protocols built on top of blockchains. The Lightning Network is perhaps the most well-known example. The Lightning Network is a Layer 2 solution for the Bitcoin blockchain that aims to lower transaction fees and increase speed by creating payment channels. The two-party multi-signature payment channels will not broadcast all transactions to the blockchain, but only the opening and closing of the channel. Layer 2 solutions are also being developed on other blockchains and might cause additional problems for law enforcement investigations. Similarly, DNS encryption is an area of concern for the investigative powers, as new approaches may create increased dependency on service providers' cooperation. This cooperation cannot always be guaranteed. It is crucial that DNS encryption, if implemented, would allow law enforcement to access and process suspects' DNS traffic, states the report. Summary. So again, they seem to be preoccupied with knowing everything that's going on, and privacy is under attack. So I guess we should all be very alert to this kind of thing. Next up is from Crypto Potato. This was posted on June 16th, today. MicroStrategy ups its Bitcoin-centered convertible note offering to $700 million. Just a day after announcing a $500 million convertible senior note offering to purchase more Bitcoin, among other goals, Michael Saylor's brainchild increased its target to $700 million. Company's shares have been on a wild ride in 2024, perhaps due to these developments around Bitcoin landscape, but have soared by triple digits since the start of the year. Ever since August 2020, when it announced its first Bitcoin purchase, the NASDAQ-listed business intelligence software firm has been using various types of funding to accumulate more of the cryptocurrency. One of its methods included going into debt by offering convertible notes. Crypto Potato reported earlier this week that the company announced plans to offer $500 million aggregate principal amount of convertible senior notes due 2032. However, the firm upped its target on the next day by 40% to $700 million. So I guess there must have been a lot of demand for that. The conditions remain the same, meaning that the percentage is still 2.25% and the due year is 2032. They will be sold in a private offering to persons reasonably believed to be qualified institutional buyers in reliance on Rule 144A under the Securities Act of 1933. As with previous such offerings, MicroStrategy said it intends to utilize the net proceeds to acquire additional Bitcoin and for general corporate purposes. Data from Saylor Tracker shows that the company now owns 214,400 Bitcoin, or over 1% of Bitcoin's total supply. Although the asset has retraced by roughly $8,000 from its all-time high registered in March this year, MicroStrategy still sits on a massive unrealized profit of $6.6 billion. Next up, from BitcoinNews.com. This was posted on June 13th. Brazil's largest bank opens Bitcoin trading for over 60 million users. Itaú Unibanco, the largest bank in Brazil and Latin America, has taken a significant step in embracing the future of finance. The bank has announced the launch of Bitcoin trading services for its more than 60 million customers, a move that could significantly boost the adoption of digital currencies in the region. This development marks a major milestone for Itaú Unibanco and its customers. Through the bank's investment app, Ion, users can now buy and sell Bitcoin. This service was initially available to a select group of clients in December 2023, but the positive feedback from those early users has led to a full rollout. Guto Antunes, head of Itaú Digital Assets, explained the bank's decision that held the acceptance of the Bitcoin trading service was extremely positive. He stated, the entire custody solution was designed and implemented within Itaú with our fiduciary duty in mind. He added, we have a stake and a partnership with Liqui, but nothing in terms of custody. The entire custody solution, since it was conceived, has been done with architecture and fiduciary duty within Itaú. So very interesting and good news for adoption in Brazil. Next up, this is from No Bullshit Bitcoin. BitFarms adopts poison pill strategy to fend off hostile takeover by Riot Platforms. Shareholder rights plans, commonly known as poison pills, are used by corporate boards to prevent hostile takeover attempts. According to BitFarms' statement, the plan will be activated if any entity acquires more than a 15% equity stake by September 10th. This mechanism will result in the issuance of new stock to the existing shareholders before that date, diluting the position of the potential acquirer. The goal is to make a hostile takeover prohibitively expensive for Riot Platforms, which currently holds a 12% stake in BitFarms. The decision follows Riot Platforms' recent disclosure that it has acquired a 12% stake in BitFarms, as well as a rejected $950 million acquisition offer. We have attempted to privately engage with the BitFarms board and recently sent 2 letters urging constructive collaboration with us around the addition of at least 2 new directors who are fully independent of BitFarms and Riot. Instead of engaging with us privately and in good faith, BitFarms has responded by implementing an off-market poison pill with the trigger well below the customary 20% threshold, said Jason Less, Chief Executive Officer of Riot, in response. This action further demonstrates the BitFarms board's entrenchment and disregard for the perspectives of its shareholders, who clearly signaled their discontent less than 2 weeks ago when they voted out company co-founder Emiliano Grodzki. We will continue to push to address the serious corporate governance issues at BitFarms and ensure that shareholders have a say in the company's path forward, added Less. So I guess post-halving, miners, which, they run tough businesses, they don't really control the price of what they're selling, which is Bitcoin, and their costs could be high. So, it's not surprising that you're going to be seeing more merger and acquisition activity in the mining space here, probably, and for the next several months, I would guess. So, we'll have to continue to watch that. Next up is from Cointelegraph. This was posted on June 14th. And now we're going to check in on price. Don't normally like to do that, but thought it would be good since a lot of people are wondering, why is the price still low when the ETFs are buying so much Bitcoin? 3 reasons why the 65,000 marks the bottom for Bitcoin is the title of this article. Despite testing the $65,000 support on June 14th, Bitcoin hasn't closed below $66,000 since May 17th, while Bitcoin was unable to break above the $72,000 resistance during this 4-week period. Some events have improved regulatory sentiment and highlighted how little room the U.S. central bank has left to maneuver without triggering inflation. Favorable market conditions and resilience in Bitcoin derivative metrics indicate that the downside is extremely limited. So first up, Washington is slowly turning more favorable to crypto. On May 16th, U.S. lawmakers passed a Congressional Review Act to explore a Securities Exchange Commission rule that required listed companies, including banks, to record crypto assets as both assets and liabilities on the balance sheet. According to Senator Cynthia Lummis, this vote was a milestone as it was the first standalone crypto legislation passed by Congress. The resolution was eventually vetoed by President Joe Biden, but the defiance from Democrats demonstrates the growing number and rising influence of crypto participants in U.S. politics, according to Craig Warmke, a Bitcoin Policy Institute fellow. While Biden's veto presents a challenge, both chambers of Congress would need a 2/3 majority to overrule it. The banking sector has an economic incentive to offer custody services for cryptocurrencies, as banks also want their share of the ongoing crypto adoption. Daniel McCabe, Chief Compliance Officer of Flexa, believes that pro-crypto lobbies and the banking industry could absolutely have an effect. Purian Boring, founder and CEO of the blockchain trade association Digital Chamber, described the Democrats' support as a watershed moment for the Biden administration. Boring claimed that Schumer's support is turning tides favorably for crypto in Washington. Essentially, Biden will have to assess if it's worth vetoing the HJ Resolution 109, as it could risk opening an inner conflict in the Democratic Party. Next, the Federal Reserve will soon reverse its tighter monetary policy. The U.S. Federal Reserve is facing mounting pressure to lower interest rates to prevent an economic recession. Recent data shows that inflation remains stubbornly above the Fed's 2% target, with the headline Consumer Price Index at 3.4%. This persistent inflation, combined with a slight uptick in unemployment from 3.9% to 4% in May, indicates that the labor market is beginning to soften. The U.S. two-year Treasury yield fell to a 70-day low of 4.69% on June 14th, reflecting market concerns about future economic growth. Meanwhile, the S&P 500 reached its highest level ever on June 13th as investors shifted toward equities and other scarce assets to avoid holding cash positions eroded by inflation and low bond returns. The Federal Reserve's cautious approach to monetary policy is evident in its recent decision to slow down its quantitative tightening program, a sign of cautious optimism that inflation is stabilizing. However, if the Fed does not adjust its policy soon, it risks exacerbating economic slowdowns as high borrowing costs continue to dampen consumer spending and business investment. And then next, Bitcoin derivatives displayed resilience despite the 8% price drop. Bitcoin's price traded down 8.5% between June 6th and June 14th, testing the $65,000 support level. Despite this drop, its primary derivatives metrics showed no significant change. The Bitcoin futures premium reflects the difference between the monthly contracts in derivatives markets and the spot level on regular exchanges. Typically, a 5 to 10% annualized premium or basis is expected to compensate for the extended settlement period. On June 14th, the Bitcoin 2-month futures premium remained above 10%, which is the threshold for a bullish market. Although less optimistic compared to the prior week, the Bitcoin derivatives market displayed no signs of stress or excessive demand for short sell leverage. Considering current regulatory and economic trends, the odds favor the strengthening of the $65,000 support level. And then one more piece on price. This is from Crypto Potato. This was posted on June 16th. Bitcoin's eerie silence. Calm before the storm or new stable era? Bitcoin fell to a monthly low of 65,000 on June 14th and is currently down around 5% since the same time last week. However, zooming out to view the bigger picture shows that the asset is still consolidating where it has been since early March. Bitcoin very rarely goes this quiet, commented analyst James Check in a post on X on June 14th. The 30-day price range is separated by just 8.3%, he added before stating, there are two outcomes. Bitcoin remains a stable coin for a new paradigm, or two, volatility is just over the horizon. Moreover, the Bitcoin sell-side risk ratio, a metric used to navigate volatility, is currently low, suggesting that most profit and loss may have already been realized. This implies that the market needs to move in order to motivate the next round of spending, the analyst said. Additionally, the quote choppiness index, which acts as a fuel gauge for Bitcoin, indicates that the market is ready to trend on a weekly time frame, but still needs rest on a monthly basis. My assessment is that the market is ready to move in the short term, volatility, but not necessarily in the longer term, trend continuation. The base case for Bitcoin remains chop-solidation, characterized by small pumps and dumps that shake out impatient holders, the analyst concluded. The fact that Bitcoin is struggling to break out is beneficial for the overall cycle, commented fellow analyst Rect Capital, who also observed the lengthy period of range-bound trading. He added that this continued consolidation is enabling the price to resynchronize with historical halving cycles so that we can get a normal, usual bull run. History suggests this consolidation could go on for another 3 months. Meanwhile, Bitcoiner Samson Mao said the Bitcoin coil is super compressed now, predicting that a huge candle is forming. Reflexivity Research co-founder Will Clemente compared the consolidation period with a similar market phase last year. On June 14th, market analyst Jacob Canfield identified two potential scenarios. Bitcoin could sweep low to around 66,000, where it is currently trading, before a strong reaction bounce to head back towards 70,000. Or there could be a deep capitulation wick down to 60,000 to 62,000, he said. At the time of writing, Bitcoin was trading at 66,200, following a 1.2% decline on the day. It is now 10% down from its mid-March all-time high, but remains range-bound with a lower boundary just below 60,000 where it dipped in early May. And to this I say, who cares? Bitcoin's price is going to do what it's going to do. Just hodl. Stay humble. Stack sats. All right, and then finally, we have kind of an interesting article from Bitcoin Magazine. Articles entitled "Lightning is the Common Language of the Bitcoin Economy." One of the best parts about running Breeze is the diverse range of people I get to meet and work with. We have partners from Jamaica, the USA, Switzerland, Germany, Canada, Estonia, and who knows where else. We have users in Finland, Wales, Namibia, India, and almost everywhere else. The people behind Breeze are split across 3 continents and come from a broad range of national and ethnic backgrounds. Agreeing on a communication platform, Telegram, Slack, Zoom, Discord, sometimes takes a bit of coordination. What never needs coordination, though, is the language we use to communicate. It's always automatically English. For many of us, English is our second or third or fourth language, and parts of it are baffling, but it doesn't matter. Every initial contact is in English, all channels are automatically in English, and all public communications, like this blog, is in English. There's not even a contender for second place. And there's basically no way to change this convention. Nobody could simply decree that we're all going to start speaking Mandarin or Esperanto or Inuktitut, whether because of convenience, actual utility, historical imposition, or sheer numbers. English is locked in, but it works, so why mess with it? This example demonstrates a few points. First, the interface between the individual nodes in a network, whether people, nations, or communities, has the form of a language. Second, there needs to be a common language. In fact, the limits of a language are the limits of the network. In other words, the distribution of the language defines the network. Finally, common languages are very sticky. Once everyone has adopted to a common language, it's basically locked in. Now, for a fact about the present that will irrevocably shape the future, Lightning is emerging as the common language of the Bitcoin economy. We've talked about various last-mile technologies before. They're like the local secondary roads that connect users to the higher throughput Lightning network and ultimately the Bitcoin mainnet. They all basically work by bundling users and their transactions into sub-networks. For example, Arc and Liquid convert incoming Bitcoin into their own mechanisms, VTXOs and LBTC respectively, that users can then send to each other according to their respective protocols without needing further on-chain transactions. Alternatively, Fedimint members effectively pool their Bitcoin and trade IOUs among themselves, with transactions and the financial state of affairs overseen by a federation of trusted guardians. With Cashew, people exchange eCash tokens and trust the issuing body. Each kind of subnetwork can use its own language. How the nodes communicate among themselves in these subnetworks is their business. What's interesting is that these subnetworks communicate with each other over Lightning, even if we're just talking about, say, 2 different Cashew mints, or when a Fedi interacts with an ARC. Lightning is the common language of all the emergent and thriving subnetworks based on Bitcoin. Returning to the analogy of English, it doesn't matter to me what language you speak at home or at the supermarket. You can speak whatever obscure dialect you want with others who understand it. But if you want to talk to me or virtually anyone else on Telegram or Slack, English is really the only option. Nobody could change that even if they wanted to, and nobody seems to want to, just like Lightning. Lightning is the common language of the emerging subnetworks. It's the language of Bitcoin. A common language is not necessarily an optimal language. It just has to work and be broadly accepted. Just like the Bitcoin main chain has certain advantages, like immutability, openness, borderlessness, etc., that recommends it for certain uses, Lightning is the best choice for a common language between subnetworks for at least 3 reasons. The first and probably most important reason why Lightning is the best common language is that it uses Bitcoin. Simply, the subnetworks might not trust each other, and they have no reason to. But since Bitcoin and by extension Lightning eschew trust, the subnetworks can interact without trust. Bitcoin is the only viable bearer asset, and Lightning is the language of Bitcoin. So Lightning is the best common language for the subnetworks to interact with each other. Further, Lightning, like Bitcoin, also eschews leverage. The whole business model of fractional reserve banks is based on a hole in their balance sheets. By contrast, every SAT on Lightning is accounted for at every moment. A balance sheet displaying all the positions on the network would be perpetually balanced. No gap, no overlap. Lightning resists imbalances due to hubris, incompetence, and villainy, which is a necessary feature in a trustless environment. Second, Lightning is a transactional protocol designed to facilitate flow. For normal payments, there's no mempool and no delay until the next block is mined. Payments take seconds, if that, and transactions, money in motion, are what make Lightning valuable. Literally, static sats on the network don't earn any return. In order for liquidity on Lightning to grow, it has to flow. A common language won't be used much if it rewards silence. It must promote communication, which is exactly what Lightning does. Further, the Lightning technology detailed in the catalog of Bolt specs is inherently interoperable. It was designed to enable multiple implementations of Lightning nodes with different design trade-offs and programming languages. All these nodes can, however, interact over a common network because they all support the same bolts. Being interoperable by design makes it easy for other technologies to add Lightning as another interface. Finally, a common language needs a sizable community of speakers. Try saying skibbity riz in a nursing home, or even better, a nursing home in Cambodia. Perhaps the biggest advantage of English is simply its popularity. More people speak English than any other language on the planet, and while only a quarter of the inhabitants of many countries speak English, you can still find an English speaker at the next table at virtually every bar and restaurant on the planet. Try that with Catalan. Lightning has already achieved a critical mass. It's already obvious how a Cashew subnetwork and Fedimint subnetworks will communicate with each other. Lightning. That's how they were designed. So switching the common language between the networks would require rebuilding most of their parts. Like English, whatever language subnetworks use internally, Lightning is the language they use to speak to each other, and it's already locked in. Actual lightning, the kind from storm clouds, is a notoriously brief phenomenon. Flashing momentarily and vanishing is its whole thing. But the Lightning Network, the interface between any number of nodes, subnetworks, and the Bitcoin main chain, is not going anywhere. Common languages tend to hold that status for centuries. Bitcoin is the world's best currency. Lightning is the common language of the Bitcoin world, and it's here to stay. For those of us already established in Lightning, this is very good news. Lightning is locked in means our first mover advantage is going to be very valuable indeed. But it's also good news for those just entering Lightning now or considering it. It eliminates uncertainty about which technology to support and invest in. Lightning is going nowhere but up. So it's never the wrong time to get started. Better yesterday than today, better today than tomorrow, and tomorrow is good too. The best time to get into Lightning is now. Always has been. And I couldn't agree more with that sentiment. Very interesting to think about the Lightning Network as a communications protocol, which it seems to be serving very well. between all the different implementations that are out there. And finally, I wanted to highlight this week's featured post on the Bitcoin Fortress Substack. Article is entitled Debunking Myths About Bitcoin's Energy. And so please check it out. I will put a link to that in the show notes. If you like what you read there, please subscribe. It's free. And then that will about wrap it up. So thank you for listening to the podcast. If you enjoyed the show, please like and leave a comment. Also, don't forget to subscribe on your favorite podcast app so you don't miss an episode. I like to listen to all my podcasts on Fountain, where you get paid sats just for listening. And if you do listen on Fountain, give me a shout out by leaving me a tip. That would be great. You can also follow my Substack. It's bitcoinfortress.substack.com. And again, link in the show notes to that. And you can follow me on Nostr. My NPub is included in the show notes as well, and not on any of the other socials. Nostr only. And with that, I will talk to you all next week. Bye-bye.